Inflation is one of my biggest concerns, and I think it should be a concern for any retiree. One measure of inflation is M2 money supply, which means how much money is in circulation. And since 2020, M2 money supply has grown by over 40%. And this is while GDP, or productivity, is really lagging behind that. And this has pushed inflation up above the 2% range, which is typically the target for inflation. My concern is that we need to make sure as retirees or people preparing for retirement is that our money exceeds the rate of inflation and doesn't get left behind. And I think what's worked in past decades isn't necessarily what's going to work in the coming decades based on this high inflation rate. To combat this trend of high inflation, I believe that retirees and those preparing for retirement should have a double-digit percentage of their savings in hard assets like gold and Bitcoin. If you want to learn more about why I believe this, stick around and I'll explain. I'm Michael, and this is b-tirement. In one of my recent videos, I mentioned the 4% rule and how I used this rule of thumb to confirm that I had enough money saved in order to retire early. And somebody left a comment in the comment section that was really a good one. And the person mentioned, you mentioned the 4% rule, so from $1 million in savings, you could have $40,000 of income. What about inflation? $40,000 today will not be the same as $40,000 in 10 or 20 years. And this is an excellent point. Now, I want to make 2 points. The first is that the 4% rule assumes that your savings are going to continue to grow and outpace inflation. So if that $1 million grows to 1.5 million, you'll be able to spend $60,000 per year. Also, a lot of people, especially recently, have been saying that the 4% rule is conservative. In an environment like we're in today, where there's persistent debasement of the fiat currency like the dollar, traditional stores of value fail, and that erodes the value of our cash and our other fixed income instruments. Money that's sitting in checking accounts, savings accounts, or even bonds is actually losing money in real terms. I'm going to share some statistics about how significant this inflation has been since January 1st of 2020. CPI, or the Consumer Price Index, is the government's official measure of the impact of inflation on consumers. And it shows that since January of 2020, that inflation has been 25.9%. But I don't think CPI really paints the full picture, so I'm going to share some others. The median home price has increased by 56% in that same time period. Now, hopefully that's a benefit to those of us that own a home, and at least we're keeping up with inflation with that home ownership. But a cost that impacts all of us, even in retirement, is car insurance. Car insurance has increased 62% since January of 2020. Now, some other statistics related to our government. So the national debt has increased by 65% since January 1st of 2020. It started then at $23 trillion, which is a big number, and recently just crossed the 38 trillion mark. And with that comes debt payments that the government needs to make. And the interest on that debt has gone up more than double, and it's currently $1.2 trillion a year that our tax dollars have to do just to pay back the interest on that debt. In this same time period, bonds have only returned 7.4%, far below what's needed to keep up with inflation. Now some good news. S&P 500, which is a diverse basket of 500 of the largest stocks, has gained 112% in this time period. So it's kept up and even exceeded the rate of inflation. And the topic of this video is hard assets like gold and Bitcoin. Gold has increased 164% in this same time period, and Bitcoin 1,500%. It started in January of 2020 at $7,200 and now is over $115,000. So from these statistics, you can see that holding hard assets like gold and Bitcoin helps preserve your wealth from this silent tax of inflation. The primary reason why gold and Bitcoin perform well in high inflation environments is because of their scarcity. Gold has a track record of thousands of years of being a good store of value. For example, in the 1970s, which was another period of high inflation, gold did very well and its price surged over 2,300%. Gold supply is only growing at about 2% per year as new gold is found and mined out of the earth. Bitcoin is even more scarce than gold. and its supply is only increasing by 0.8% this year, and that rate will continue to decrease year after year until 2140 when the last Bitcoin is mined. We start at 2025 with 19.8 million Bitcoin in existence, and just another 164,000 Bitcoin will be mined this year. And in 2140, the final Bitcoin will be mined and the total cap will be just 21 million. So unlike gold, which will continue to be found and mined, Bitcoin has a hard cap of 21 million Bitcoins. Both gold and Bitcoin are bearer instruments, which means you can hold them yourself in your own custody. You can buy a 1 ounce gold eagles, which are currently going for about $4,000, and these are minted by the US government. You can buy and hold those yourself, and you don't have to rely on any third-party counterparty to hold that gold for you. You can hold it yourself. Likewise, you can do the same thing with Bitcoin. You can buy Bitcoin on an exchange and then transfer that Bitcoin into your own self-custody using a hardware wallet. Gold and Bitcoin, especially in self-custody, is a way to ensure that you have control of your wealth and you're protected from the debasement of the money that's currently happening. I believe that Bitcoin has become the best money ever in human history, and that's because of its scarcity, the 21 million supply cap that I've already mentioned, its portability. It can be transferred from wallet to wallet, person to person in minutes over the internet. And finally, its divisibility. You don't have to buy one whole Bitcoin. You can buy as little as 1 Satoshi, and there's 100 million Satoshis in 1 Bitcoin. Or for $1, you can get over 800 Satoshis. You can start small and slowly grow your stack of Bitcoin. I believe that Bitcoin is still being monetized, which means its current price does not yet reflect its true value. So for example, the market cap of gold, which is the total supply of gold times the price, which is currently about $4,000 per ounce, is $28 trillion. And Bitcoin's total market cap, so the 19.5 million coins times the $115 price, is only $2.3 trillion, so less than 10%. And for the reasons I've mentioned, I believe ultimately Bitcoin will be recognized as a better store of value than gold is. And I'm not alone in this belief. Matthew Siegel, who's an analyst with investment firm Van Eck, recently predicted that Bitcoin could reach a price of $644,000 by 2028, as younger investors recognize it to be a preferred store of value over gold. And JP Morgan, one of the most prominent investment firms in the country, estimates that Bitcoin could reach $165,000 this year based on what they term as the debasement trade, in reaction to the debasement of the value of the dollar. I believe that when thinking about gold versus Bitcoin as your preferred store of value, you ought to reflect back on the past and how certain institutions in the past that were once believed to be a bedrock of the economy fell away and were replaced by something better. For example, in 1980, Sears was the largest retailer in the United States. And just 10 years later, they were replaced and surpassed by Walmart. And now Walmart is being challenged by Amazon. So just as Walmart found better ways and more efficient ways to be a retailer than Sears was, Amazon obviously has changed the game for retail also. So it's important to stay tuned, as I've said in past videos, of where the puck is going, not just to where it's been. And I think in terms of store of value, gold has been where the puck has been, but Bitcoin represents where it's going. Now, I own some gold, and I respect people who view gold as the preferred store of value. There's nothing wrong with that, and the statistics that I shared earlier show that it's been a great store of value and kept up with and exceeded inflation. So it's protected your wealth from the inflation. I just believe, for me, that Bitcoin is better. So it's really up to everybody to decide two things. One is how much of their portfolio to put into hard money. So for example, Morgan Stanley recently recommended 2 to 4% of a growth portfolio to be in Bitcoin. Ray Dalio recommends 15% of your portfolio in either gold or Bitcoin. For me, that number's higher. I'm currently over 50% in these hard money assets. So really, before you put a large portion of your portfolio in either gold or Bitcoin, it's important to do your own research. And a good way that I gained understanding deeply about Bitcoin and what it represents is through reading Bitcoin books. And a few that I recommend are The Bitcoin Standard by Saifedean Ammous, Broken Money by Lynn Alden, and The Big Print by Lawrence Lepard. and I'll have links to those down below. So I really believe that it's important for any retiree or somebody that's approaching retirement to deeply understand inflation and how hard money like gold and Bitcoin is a way to protect yourself and your savings. If you appreciated this video, please like and comment below. I'm Michael, this is b-tirement. I'm putting out similar content every single week, so if you like this, please subscribe.